So let's talk about peak formation, resets, and levels. So first, let's go ahead and talk about peak formations. So peak formations. So these are essentially the M and W at the top or the bottom of the market maker cycle. So market maker cycle being the MAAW or the WVVM. Peak formations are what the M and the W are in the cycle. Okay. They usually happen after 3 times ADR in one direction has been completed. So what is ADR? ADRs we'll learn about uh, in a couple minutes is the average daily range. So every pair has an average daily range that it moves, whether it be 50, 100, whatever. You take that daily movement, you times it times 3, it gives you a total ADR of whatever for that pair. So, example, if pound USD has an average ADR of 100 pips per day, then 3 times that would be 300 pips. So typically, you would find pound USD would move 3 times or 300 pips in one direction before you get an actual reversal. Does that make sense? So that's what ADR is. So usually 3 times, after 3 times ADR in one direction, you typically get a completed pattern and then you should get a reversal. So the ADRs though, they're not always perfect. So there's a specific range that I found that works the best. And so we're looking at typically can be from 2.5 to up to 4.5 times its own ADR. So meaning, for that same example, let's say pound USD, instead of going 300 pips, it might go like maybe 270 and then reverse. Or it might go 400 pips or 425 and then reverse. So the ADR varies because it just depends on how many orders they need before they can actually reverse. Remember that the biggest disadvantage that we have is that we don't know what numbers they need to match, how many contracts they need to get before a reversal is made. So the one advantage that we have is, speaking of just the peak formations or the market maker cycle here of the MAW or the WVVM, is the fact that we know they typically move within 3 times ADR because they can't keep going up and up and up and up and up without having some sort of retracement. Okay. Because if not, it throws everything off whack, throws the currency, the world economy, all completely off track. So, the confirmation of these peak formation happens once you get across of the 13 and the 50 EMA on the 1 hour chart. Meaning that once the M forms, or the W forms at the bottom, it's confirmed on a 1 hour chart once you get a crossover of the 13 and the 50 EMA. Once that crossover happens, typically that's when you start to see consolidation of a level, basically level 1. So, market resets. So what the hell is a market reset? And why does it happen? So in the simplest form, the resets happen when market makers need to push price further than 3 times ADR. So let's say that market makers want to drop pound USD, let's say, I don't know, 700 pips. And they want to drop it, they want to sell it, right? They want to drop it down 700 pips. So can they go down 700 pips straight down? No, they can't, right? So they go down 3 times ADR, 300. They go up 100 or 1 times ADR, and then instead of continuing to go up, they know that their move essentially is always to keep going down. But because they can't just go down 700 pips, they have to go up at least up 100 and then continue to go back down again. So that up move of 100 pips, or that retracement that goes up and then it breaks and continues to go down for another 300 pips, that right there is the reset. It's just a way that market makers can keep going in one direction. And when you look at it on a bigger time frame, it just looks like it's just keep going down, 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 down. But if you go to a lower time frame, like an hour time frame, you'll see that they just keep resetting. They just go down 300, go up, reset, keep going. They just keep doing that over and over and over again. But if you look at it on daily, it'll seem or appear that holy crap, they just go down for months, and they really don't. So they usually happen, the resets usually happen at level 1 accumulation. They can happen at level 2, but nowadays it's not very likely. It used to actually be reverse. They used to happen more at level 2. Now they actually happen more at level 1. These resets are confirmed once they break the closest peak formation. So meaning that if, same example, GU, if it goes down 300 pips, okay, and then it forms the W, right? So you have a full MAAW, 300 pips down. They go up 100 pips to level 1, consolidate, consolidate, consolidate. And their whole objective, right, was, let's say, to keep going down. They'll drop the price down. Once they break that previous low, that W, that's when the confirmed reset happens, right? So that's when you know for sure it's a reset. There will be times where they just go back down to retest that same W low that was created. And so that's when it's an unconfirmed or a failed reset. But once confirmed, you can expect another 3 times ADR in the same direction, right? So you get 300 pips down, 100 pips up, and then another 300 pips down, or whereabouts. So 270, 300, whatever they want to do. So if the attempted reset fails to break the closest peak formation, it's considered a failed reset, and you can expect the movement to continue in the original direction. So meaning, same example, GU straight down 300 pips, makes the W, goes up 100 pips, consolidates, and then comes back down, and it looks like it's going to be a reset, but it doesn't break the W that is meant to break, and it just stays there, and it finds support there, and it goes right back. You can expect the move essentially to go right back up. When it fails, when that reset fails, it basically creates a multi-day M or W formation, and you can see it clearly on a 1 hour or 4 hour chart. I'm going to show you all this stuff when we look at the charts, but I just want you to visually see what's happening. So all a reset is just a way that market makers use. It's an excuse of how they use to keep going down, down, or up, or up, or up, to keep the trend going. That's all they use it for. All right, so let's go ahead and let me share the screen here. Let's break down these peak formations here so you can get a better idea. Where is my thing at? Okay, so peak formations. The best time to see these peak formations, or the best time to see peak formations in general, I believe it's going to be the 1 hour chart. So anything that we talk about, levels, resets, anything like that, is going to be primarily to the 1 hour time frame. All right. So if you take a look at this, let me start to get rid of some of these here so you can. All right, so if you can look at all this, let's take the most recent price action here. Here's our examples of failed resets. You can see price came from this peak formation high, went down 3 times ADR, gave you a peak formation low, went up, and notice how it only went up about 169 pips. Right? So 169 pips is not 300, obviously. So we know that this is likely to reset. But what happened? It never actually went past the low to do that, right? So it didn't pass this low. It went right back to it, didn't pass it, right? So this right here is a failed reset. Go back up again, thinking that we're going to go back up, but did it do that? No, it went right back up to the same place, 160 some odd pips, and then started to come back down. This time, you see though, we actually broke the low here with this move. And you can see from here to here, if you measure it out, it comes out to 3.5 times ADR. Okay. So just to draw it out for you, so you can visually see it, essentially is this would be your peak formation high. Here's your level 1, level 2, level 3, or peak formation low, which is your W, right? They come up, they give you the V, the first V here, and you think, oh, it's going to go back up. But no, it just keeps going down. Instead of turning around here, it doesn't do that. It just keeps going. And it keeps going down and it breaks this low. This right here becomes your reset. You can expect 3 times ADR down in that direction at least. Whenever you have a reset, and it's a confirmed reset, meaning that it passes, this low here, this reset here becomes your new peak formation high. And then just go down 3 more levels. Does that make sense to everybody? Okay. So if we look at So if we look at this here, where are we at currently right now on pound USD? We just had a peak formation low, and if we measure it out, we're about 213 pips. Are we anywhere near 3 times ADR yet? No, right? We're not anywhere near 3 times ADR. So you might ask yourself, how do I know what the average ADR is, right? So if you look at your indicator right here, it says ADR 93. That's basically the average ADR for the day on that pair. So you literally take 93 times 3, and that's how you get your 3 times ADR. Does that make sense, everybody? You just literally take that number and you times it times 3. Right? So what does this allow you to do? Why do I love this so much? Because it allows me to project out essentially where I think how high price might go. So if it doesn't reset, right, if it doesn't do any resets and it just goes 300 pips out, you're looking at somewhere here. Now, is it coincidence that that's the same place where price action has structure, right? If you look here, there's all structure right here, right? That's 300 pips. That's 3 times ADR. Also, is it a coincidence that it's the same place where the frickin' 800 is, or where the 800 EMA is? So you see how it all starts to basically come together. Now, let's just say if they want to reset again, right? Then if they want to reset again, cool, no problem. Where could they go? Where could they possibly go from here, let's just say, if they decide to drop and reset? Well, if we take a look, and if we drop down about 300 pips or so, it's probably down here, somewhere around this area. Now, just pay attention to the fact of the number itself, 135, right? It's a round number. It's a psychological number for us traders, or literally for humans, right? It's down there. So if we start going up in time frames, right, like 4 hour or something, 8 hour time frame, you can see where previous price action has reacted around that area, 35, 34, 800. But you can see the reaction that you've gotten. Look, right here, right here, right here, right here. So it's there, right? It's all there. So if they do reset, it's very likely to go back down to this place because it's a round number. It gives you 3 times ADR, so forth and so on. So you have a plan, essentially, either way that they decide to go. So you can always go all the way back up to the top here, and you can see how this basically works. Let me take out this. Let me take out this. Let me just take everything out. So you go from this top here, from this very top, this is peak here, you go down 4.2 times ADR down, peak formation. You go back up, you don't make it anywhere near, obviously, 3 times ADR. You come back down, you break the low, this reset. This is a full reset. You go down 3 times ADR, comes up, tries to reset, fails it, goes back up, fails it, and then actually makes it. And that's where we are now. But you can keep, literally, you can go back and you can see 3.5 times ADR goes up, stops, goes back up, breaks that, creates a peak formation high, 2.7. I mean, you can literally keep going and going and going. Is this making sense to everybody? Now, you can keep the way that the way that you know that you're doing this correctly is because you can literally just keep going. You can literally just keep going. So just by looking at this, this looks to be 347. So this looks to be a low. This looks to be possibly like a reset here. 227, 242. $211. This clearly is a reset here. And then that goes back up to a failed reset. So you can literally start to point this out. Do you see what I'm doing? So you can literally just keep going. You can keep going with it. Or this is actually a failed reset. So you can just keep going with it, and you just, I mean, it's incredible. Once you start doing this, like, you will never look at it again this in a different way. And I mean, you could do this with pretty much all of them. You know, it's the same thing. So this leads me to the ADR and directional bias. The ADR and directional bias, I mean, knowing where the peak formations are and how to calculate them via ADR will give you your directional bias. So if I know that I'm at a peak formation here, what am I looking for? Anybody? If you're just coming off a peak formation, what are you looking for? If I'm coming off of peak formation high, what's my directional bias? It's a sell, right? That's it. It's a sell. If I'm coming off of peak formation low, I'm looking for buys. I mean, it's that simple. Like, don't overcomplicate it. So I think the hard part for a lot of traders is that, let's say you're looking for, let me go back here to see. You're looking for let's say you're looking for buys, because you're coming off a peak formation low here and you see it moving back up, right? There's no reason that this should be moving back up because you just had a peak formation high. So you should be looking for sells, right? But the fact that this broke this little structure here and now it's starting to move up, it should tell you that you're very likely to have a reset, right? You're very likely to have a reset. So you should start to look for buys. And so you end up getting buy setups, you know? There's going to be times where you're coming off of peak formation and let's say like you're coming off a peak formation low, and so you're looking for buys, but then you end up getting, let's say, a sell setup, right? So what do you do at that point? Do you take the sell setup or do you skip it? What do you think you should do? Samantha says skip. Skip. Yep. So here's a good way to know whether you should skip it or not, right? If you're coming off of a peak formation low, right? If you're coming off a peak formation low and you have the crossover, the 13 and 50, and you're seeing this, and you're like, I'm looking for buys, right? But you get a sell setup. If you're at the first level here, you should not take the sell setup. You should skip that trade. However, if you go up to another level and you're here, let's say you're level 2, you're not at level 1. Level 2 very possibly could give you a sell setup. That doesn't mean that you're changing your entire bias on the overall direction of the market. So if you're at level 2 or higher, you can take a sell setup here knowing that that trade is going to be a very short-lived trade because your bias is still to buy more because you haven't gone to 3 times ADR. And so you'll see that you will literally have the opposite setups appear, and I mean really good ones appear, but they have to be above the first level, right? So if you're trading so if we're here, we're at the W, and here's level 1, we go up to level 2, and let's say we've only gone up, let's say 200 pips, we know that there's still 100 pips left to go, right? So we know that the overall direction is still a buy. But let's say at this level 2, we get a really good type 1 setup that meets all of your requirements, right? It's got really good extension outside of the Asian range, so it's extending out. It gives you the second leg inside of either the London or the New York box. You get a railroad track on that second leg. You get all the confirmations are there. You can use, in this case, you're going to be able to use the EMAs as your take profits because you're in an overall uptrend, right? So you're going to have the 50 is going to be here, the 200 is going to be here, the 800 is going to be here. So you can take the trade and basically take it to the EMA. And then once that trade is over with, now you can look for essentially buys the next day. Or it could be possibly the next session. If this happens, let's say if this setup here were to happen in London, it could go down to the, like, let's say the 200 and then give you a reversal in New York. Does that make sense to you guys? Let me know if anything does not make sense, so I can clarify. So ADR, again, is just the average price movement of whatever pair you're trading per day. If you like to use like a website or something like that, you can use the investing.com website. They actually publish it for that also. So like here, I'll share it in the chat there. So if you go to that website, that link in the chat there, it'll give you all of the average movement of price for all of the pairs. So you'll see all the AUD pairs, all of the CAD pairs, Euro pairs, Pound pairs, USD pairs, all that. All you have to do is take that number times it times 3. Okay, so levels. What are levels? Levels is basically this. In the bigger picture of the cycle, that's a level, and level 3, peak formation, low. Some people call this level 3, other people call it peak formation. But all level is a consolidation that creates, in this case, it would create DA, go down, consolidate, create DA, go down, and consolidate and make the W. Now, there are going to be times when the pattern will look like this. You'll have 1, 2, 3, and then peak. And then here's peak formation high. The question is, why are there 3 levels and then peak at the top, peak at the bottom? The reason is because once they get down here, once market makers get down to this area down here of level 3, or once they get down here, if they realize that, hey, we want to make this move back up, but we don't have enough contracts to do it, or essentially saying we don't have enough people selling for us to make this move of buying. So when they don't have that, they will make another level. So it would basically turn into like that. And you'll literally see 3 levels and then a peak formation. a lot of times what you're going to end up seeing is you're going to end up seeing stuff like this. You're going to see a lot of V shapes at the very bottom. So you'll see your M, your level, your level, your level, and then the very last thing, the peak formation, is going to be V. Okay. But the only reason that's done is because they realize that they don't have enough orders to go back up, and they need more people to sell, so then they can take the opposite of that and buy. So like here you have your M, your level, 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 and then a V. Does that make sense to everybody? Let me know in the chat, please. So, directional bias. I simply get my directional bias by being able to identify the closest peak formation. So I know what direction I'm looking for to trade. That's it. You can use the EMAs if you want to. So like the 800, if price is above the 800, obviously they're going higher. But for me, I love just using peak formations and the actual movement of price. So this is why for me, it's hugely important to track where my peak formations are. Just because I know that once I know where I'm at, it's done. I know how to trade. I know what direction I'm trading. On what pair, Samantha? So on this pair here, um, I'd be looking for buys actually, because we just had 3 times ADR right there. And we just had, this is level 1 here. So I'm looking for buys. If no buys appear, right, if there's no buys and it actually drops, then I'm already thinking, okay, this might turn into a reset and they might want to push it lower. I don't do anything. I don't speculate on anything. I let the charts tell me. I don't like to guess. You know what I mean? So people ask, what do you think pound USD is going to do this week? I don't know. Give me a day or so. Let me get data. You know what I mean? I can tell you, well, based off of this, I expect it to go up because I know I'm coming off a peak formation low. But I know that at any point in time when they want to, they could keep going down, right? But I know that would just be a reset. I know why they're going down, basically. You know what I mean? Every day this updates. So the more data that I get, I'm constantly updating this. So as it changes, I may have to change something around, but whether it's adding, a reset or whatever. This, by the way, like levels, resets, all that stuff right there is the hardest. It's the hardest part of the strategy itself. This is what takes the majority of traders the longest time. It's also the most confusing of everything for the traders. But once you understand the simplicity of it, and don't try to just complicate it. There are some pairs that are, I don't know, sometimes they feel like they're impossible to track because of the sideways movement, or a lot of sideways movement that they do. So I believe a lot of the Swiss pairs do that, and this is why you don't see any Swiss pairs on my chart, because I don't like to trade them. But as long as you can keep track of the pair, you're good. As long as you can understand what's going on, you're fine. Like on this one here, like I just have peak formation high here. This is just a movement sideways. I can't do anything with that. You know what I mean? So I can only go off of the determination that I'm still looking for sells here because of I'm just still coming off of peak formation high, and it's just been consolidating for like a week and a half. Once it tells me anything different, then I can change it, or then I could change my thought process. But there's no reason to speculate. Just let it show you. They will show you what they're going to do. You just have to be patient. Again, you get paid to literally wait. You just get paid to wait. That's it. It's nothing crazy about it. You literally just get paid to wait. So tell me, what questions do you have regarding peak formations, levels, and stuff? Is there something that seems confusing, or I don't know, anything at all? So reset or continuation. How to confirm? Is that what you're saying, Hassan? Okay. So tell me specifically just about the reset itself. What is it about the reset that you don't understand? You do understand. Or is it that you just don't know which direction it's going to go, whether it's going to reset or not? Yeah, the first indication, Hassan, is going to be whenever you're expecting. So, like here, if you're coming off of um, if you're coming off of peak formation high, in this case, right, and it goes down, you get 1350 cross, right? So you're good. So you're like, cool, I'm looking for sells, right? But as this plays out, this is Monday, and goes into Tuesday. You're like, if I'm looking for sells, if you're looking for sell setups, right? Why did I just get a buy here? A type 2 multi-session buy. Do you see what I mean? So that's your first indication right there. It's like, if I'm looking for sells, why did I get a buy setup here that breaks this structure, when I should be getting a sell setup to go lower and break that? Does that make sense? Well, the ADR, I mean, on this particular one, um, what is it like? Pound of the D is pretty high. It's 111 or no 152 pips, right? So pound of the D has an average ADR of 152 pips a day. Okay. So the ADR really in this case here has nothing to do with it. I just know that I just counted. If you go back, I just came off of 3 times ADR from here to here. You know what I mean? So because I just came off of 3 times ADR, I should be looking for sells. The problem is I didn't get a sell setup. I got a buy setup. So because I got a buy setup and I broke this little structure here of a level and I went up higher, that's your first indication that a reset could happen. Do you get that part? And so just look, as the rest of the week played out, you got a sell or you got a buy setup here, and then you ended up getting a sell setup here, but then you went right back. Do you see that? And then this right here, this is not a trade. Obviously, this is during the Asian session, but you did get a trade set up here to go back up. So again, that's what the clues are, that you're getting buys when you should be getting sells. You know what I mean? That's the clue. Is that you're looking for sells, but you're like, I'm not getting sells, I'm getting buys. And it's not like they're bad buys, they're good vibes, or they're good buys, and they're trading essentially above the range of the level, you know. So that's where that comes in. You can see this is another setup here as well on Friday, right here during London. This is a type 1 setup. So if you go to the 15-minute chart, here's a type 1 setup here. Here's another type 1 setup. So you're getting setups to buy instead of sell. That's going to be your first indication of, wait a second, there's something wrong. What are the questions, you guys? Does that answer your question, by the way, Hassan? Yep. What other things do you guys have questions on? Just remember to keep it simple, right? If this is your pattern from here to here, should be around 3 times ADR. That's it. The way it works out typically is this here is 1 times ADR. This here is 1 times ADR. And this here, this last move should also be 1 times ADR. Right? The problem is that all this stuff is out there, obviously, so they know that we know all this stuff. Yeah, Samantha, the EMAs, actually, that's what we cover the first thing in the morning tomorrow. What the purpose is for the EMAs. But essentially, the EMAs you're going to use for entries, take profits, is what you're going to use them for mainly. And confirmations of entry. Yeah, so everything on here, has like a purpose. But yeah, we're going to cover tomorrow is the first thing is EMAs, TDI, London session trading, New York session trading as the first half tomorrow. And then we'll finish it with psychology, risk management, back testing, and Q&A. So any of this stuff here is going to literally take time for you guys to get, right? You're not going to become masters about this stuff tomorrow, next month, or anything like that. The more time that you spend with it, obviously, the better you're going to get. So when we talk about tomorrow, we talk about back testing. When you back test, if you're doing this while you're back testing, I can guarantee you by the time you get to where price action is, you're going to be really good at this, or really good at like the peak formations and levels and stuff. I don't worry too much about levels. I worry way more about finding peak formations high or low. Because ultimately, the peak formations is what's going to help me get the directional bias that I need. Because what you'll notice is there's some instances where, let me go back up here. where you notice that, if you're counting, levels, some of these levels aren't really that big. You know what I mean? So to me, they're not as important anymore as they used to be. If you're intraday trading, if you're going off of like a if you're going like off of a daily chart, right, then it might be really important, because if this is the peak here, peak formation high, this right here is level 1, this right here is level 2, and then this is now starting to work its way to level 3. The problem is that this level here took about a year and a half to complete. This one here took about 2 years. So God knows how long this is going to take to complete here. But if you're using the ADR, I think for what you're going to be using it for a peak low. Yeah, so this is on a weekly chart, right? So yeah, this is basically on its way down. This is level 1, 2, and then this is going down to 3, right? So we want to see whether or not this is going to do this, and that would give you the third level, basically, you know. And so if it follows, let's say if the dollar, right, gets strong based on what it's done since 1985 or whatever, this would go back up. So then that would be 1, 2, and then here's 3. But I mean, if you go, look, you can see this. Look, you can see this is on a week, again, this is a weekly chart, but you can see the, you can see the pattern here. Right, so on a weekly chart, this is your peak formation high. This will be like level 1. This will be building out level 2. So you could see it there, right? You could see the levels. The problem, clear problem, obviously, is that this is the weekly chart. So this is just this here, this chunk of level 1 is from 2009 to like 2015. Right, exactly, yes. So we're waiting really for another move down here to complete just level 2, and then another level down here for level 3. Yes. How long that's going to take, who knows? Let's see here. So what are the questions you guys have? So we know resets. Just let's review some stuff real quick. What's the purpose of a reset? Let me know in the chat. What's the purpose of a reset? Right, to continue the original move, yes. To continue the original move. Right. So if market makers are here at 122 and they want to get all the way down here, right? What is this? So here, that's 4,000 some odd pips, right? Can they go down freaking, 4,000 some odd pips in one direction? No, right? They have to do a full, 3 levels of drop, go back up 1 level, reset, drop 3 more levels, give you a W, go back up 1, reset. I mean, that's just what they're going to do over and over and over and over again until they get from here all the way down to here. Now, they might reset on, let's say, level 1 here. On the second time around, they might go back up and level and reset at level 2, and then go down. Do the 3 levels of drop, go back, do 1, and then reset at 1 again, right? It's just all it is, just a way to keep it going, keep the trend going, right? How many pips? Let's say if the ADR is 50 pips on Euro USD, what's 3 times ADR on it? $150, right, good. What helps you confirm peak formations? So how do we know we got a good peak formation? There you go. So the first thing is we need to have had at least 3 times ADR in one direction, right? That's one. And then secondly, you would have needed to have a cross, like Hassan said, of 13 to 50. So yeah, you're correct, Hassan. So 13 and 50 crossover on a 1-hour chart plus the ADR. Those 2 things will help you confirm and find the peak formations. Okay. So let's talk about, let's see if we have, let's go to a different chart here. Or this one. What you'll notice, by the way, is on a lot of these charts, they move very similar to each other. So if you look at pound JPY, pound USD, and pound CAD, they're very similar to each other in ways of where they are in peak formations. You'll notice also that pound AUD and pound NZD also move very similar to each other as well. What you may find is that two pairs are more ahead of one pair. So let's just say, for example, well, here, this is a good one here. So pound AUD and pound NZD move very similar to each other because they're literally trading in the same period or in the same session. So meaning the Aussie dollar and the New Zealand dollar, right? So they typically do very similar things. You can see here that pound NZD has basically kind of left the peak formation high and it's created level one, while pound AUD is basically trying to find its footing here of peak formation. So essentially, pound NZD is ahead right now in the movement. Do you get what I'm saying? Does that make sense to everybody? Whereas if you look at, let's say pound USD is coming off of peak formation, pound CAD's coming off of peak formation, pound JPY is coming off of peak formation, right? So all three are like doing the same thing right now. But I mean, just look at the at the structure of all these. And so, what I meant also with not, I don't stress too much um, about levels is because you're gonna have sometimes a price action chart where it looks like there are no three levels of drop or rise. There's literally like three times ADR. You know what I mean? So like example here on this chunk here of peak formation low to peak formation high, you really have this gigantic movement sideways. That's one level. If you want to make it three levels, I mean, you really can, right? Here's a level here, here's a level here. So you can make it three levels. But there are going to be times when you see it and you're like, damn, there's not even, the price movement happened so fast that it did not make three levels of drop, you know. But if you look hard, you'll see them. They're there. But sometimes the price movement is just so freaking fast that you're like, wow, it moved fast. If you want to seriously count just levels like this, like, do this, I think a good one to do would be like a 4 hour chart, because you're really not using, once you go above a 1 hour chart, you're really not using ADR anymore. You're really more focusing on the bigger picture. So you can see, you can start to count the levels way more than you can. So if you look at, let's say, this piece here, just this piece right here. Can everybody see the M here, right? Everybody can see the W here, right? Can everybody see the M here, right? Can everybody see the W here? Yes? So on a 4 hour chart, you just found basically the peak formations, right? So now put the rest of it together with levels. So where are the levels at? Remember, this is a 4 hour chart, so 3, 4 candles may not seem like a big deal, but if you go down to an hour chart, then obviously that doubles in the candles. You know what I mean? So this may be an M. This might look like nothing, but it very well be a level here. You know. So here's an example of 1, 2, 3, and there's your W there. This one here is an M, and then you have there's a level here. This is a whole level here. This is another level there. You see what I mean? So if you want to count, um, the levels themselves like this, I think you'll get way more visual effect by doing it from the 4 hour time frame because you're not worried about counting ADR or anything like that. You're just literally looking at levels. Just like if you were doing it on a daily time frame, you're not counting ADR because you understand that on a daily range, right? This right here could be like a 5 year process, you know? So that's why I said it's looking at it from a 30, or you're looking at you want to look at it from a 30,000 foot view, or you want to look at it from ground level view, and so that kind of determines what do you use. Are you a swing trader? You're a day trader? Most of the stuff that you're going to be using right now is going to be day trading stuff, day trading techniques, you know. All right, so tell me what requirements, what are some of the requirements that you need in order to have a good type 1 pattern? What are some of the things that you would need to have a good type 1 pattern? Definitely need a stop hunt, right? Yeah, yeah. Right, that's right, Bernard. The same thing as the stop hunt, right? You need it to be above or below the Asian range. Yeah. Second leg, London or New York session. Yep. So just like this, right? It's a huge move. This is your first leg. You come down. Here's your second leg. Railroad track. You get a retracement, and this part here is your trade. How many candles? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 candles on the apex. Some people might see this pattern here. Yeah, see, would you not consider would you not consider them in London? Yeah, it's literally what I was saying. Some people might see that, yeah. But yes, this is why, due to the candles, yes, exactly. That's why. Because you see what happens. It stops here. The think about it like this: the rules that I give you, right? I give you the rules that are going to give you the best possible trade setups. But that means that if I'm giving you the rules for the best possible trade setups, it means that you're not going to be trading every day. Right? And so you have to get over the fact that you're not going to be trading, you're not going to find setups every single day. You might find trade setups if you're following like freaking 20 pairs or something like that. But sometimes you just come in, man, you just get a feeling like there's nothing here worth trading. So here, what's the setup here on this day? What's the pattern? Interesting. So somebody sees a W, second leg New York, okay. Somebody else sees a type 2 on the edge trade. What else? What does everybody else see? Remember, it's not always going to look pretty. If it looked pretty, we'd all be millionaires. Literally. Yeah. So a lot of different things, right? This is the point that I stress so much, is that everybody sees a different thing. So to answer the question, what setups do I see here? The setup for me that I see here is a type 2 trade in London. So this right here would be the first leg, and then you have 1, 2, 3, 4, 5, 6, and then a railroad track here. So the pattern would be this here, down. That's my take profit, and I'm done for the day. And it's only 4:45 in the morning. So does everybody see this trade here? So for those of you that say this right here, that could possibly be a trade, but not for me, because I'm not looking. That's a really that's a really ugly looking W for me. And so when something's really ugly, like, I'd just rather not trade it. Besides, I would not, the first thing when I look at this, I would not be looking for buys in the US session. I'd be looking for more sells than anything, because of where this is at the very beginning. Because we're all the way up here. So I wouldn't really be looking for buys. what pattern or what setup is this? So Ward, you said type 4. What does everybody else think? Bernard, you're not sure? Just think about this. What happens when it comes out of Asia? And it goes straight up and then comes right back down. Where does it go to? Most importantly, where does it pin to? Where does it pin to during London? Right, the middle of Asia. So if it pins the middle of Asia, what does that mean? It's a type 3 setup, right? So not only does it pin the middle of Asia, but then you get a railroad track right after it. So that's your entry. Right. What you'll start to notice is that the pins at a specific time matter a lot. Okay, because the pins at the right time with the right pattern essentially tells you what they're doing. So, what about this day here? Is there a setup here? And let's just focus in on London session, not really US session, because we haven't talked about US session. So just in the London session alone, is there a setup to trade? If there is a setup to trade, what is the setup? If not, there's not. So Samantha, tell me, well, one thing that's telling you that this is not a trade setup in London. And Bernard, tell me where you see a type 1. Samantha, you just don't see a clear pattern. I'll take that. Yep. Ward, where do you see a type 2? So I can assume that this is the trade that you're talking about here. But where's the first leg at? If you're thinking that this is the first leg, that's really not a first leg. First leg London Evening Star. Second leg once it pushes back to the middle of London. So you're talking about this? Is that right? Okay. So tell me, what are the good things about that particular setup like that you're seeing? Which is what you're seeing is this right here. So the first thing is this would not be a type 1 setup because price is actually on top of the bottom of the range, right? So that would not be a type 1 setup to begin with. If anything, it would be a type 2 setup. So how many people would take this trade as a W? Just off the pattern itself. Is that a good pattern? If you take this pattern, where would you enter at? Bernard, where would you enter at on this pattern? Once you see the morning star, or after the morning star. Okay. So what, like this? Is that what you're talking about? So like that. Okay. Got it. Is there anything wrong with that morning star? Long wick. No, nothing with the really the wick. The wick is actually good. I like the wick. I wish they were all like that. It's a pretty long wick though. The biggest problem that I have with it is this candle here. Why? What's the problem with that candle? Right, it's not big enough. Meaning like it doesn't cover at least 75% of the previous candle. Do you understand what I'm saying? So it's like basically, just to zoom it or make it bigger, right? You have this, but then this candle's like this. Do you get what I'm saying? So because that's that way, so because of that specific aspect of it, I can't get in down here. So you have to wait for, basically another confirmation, which is either a close above the 13 or a crossover. Well, by that time, that's out of range. Does that make sense? Is there a trade setup on this day? If there is, what's the trade setup? What's the trade setup on this day? Semantics say type 1 sell. Okay. Anybody else? Not for you. Good. Yeah. London got about a 200. Yep. 280 ADR. Yeah. So here's the problem with this. As great as this move is, there's really not a setup to get into it, because as much as you want this to be a type 3 setup, it's just floating in midair. Okay? And as much as you would want this to be a type 1 setup, let's say this right here would be the first leg, and then this would be the second leg, right? The setup itself would be that. And yes, you'll get 2 to 1, but the problem is that you're risking too much. Do you see what I mean? You're risking 30 pips. It's too much of a risk. Just remember that there's not one trade that is worth gambling your money on. It's not like tomorrow there's no more trading, or next week there's no more trading. I don't know, where would you get in on a 5-minute chart? Yes, take the best and leave the mess. Yes, exactly. This is why I'm telling you not to worry about what other people are doing. Because worrying about what other people are doing and how other people are trading doesn't matter. Because at the end of the day, they're not trading for you. You're the one that's trading. You're the one that has to trade your account. They're not trading it for you. So if you look at the previous day before that, what's the trade set up there? Getting on the railroad track in New York, right? So the trade setup here is a type 2, right? The first leg is here, the second leg is here. It's a railroad track, and you get a pullback that's like half the freaking candle. Yeah, so the entry on this would be again on the pullback. And now you're at a 3-to-1 risk to reward ratio. Is there a trade setup on this day? If it is, what's the trade setup? It's a tricky one, right? Yeah. Yeah. It is a tricky one, yeah. So, I mean, the clear problem here is what? Is this, right? How on God's green earth are you going to get into that trade? Right, that's the tricky part. The thing that you don't realize is that this right here was news. There is a pattern to trade here, which is here and this. That would be a trade that you could take. I think the problem is going to be with the stop loss though, because that you don't get really a pullback on the next candle. So it'd be like that, and it's not a 2-to-1 risk to reward ratio. And besides, you would be mostly aiming towards this, the 200. So you could see it really wouldn't make sense. So you can start to see, yeah, you can start to see that like how you can start to determine, you know, what are good trades, what are bad trades, what are good trades, what are bad trades, right? This one here, the previous day before that, same thing. This is an 8:30 news candle. There's not really a way to trade this. This right here is an M formation. The problem is what? What's the biggest problem? Is there a problem? No, I think the risk reward is there actually. Ah, yeah. Hassan, you got it right on the thing, man. So the biggest bother to me would be that it's literally right at the edge of the box. Well, you wouldn't on this one. You wouldn't have to wait for a crossover because you have a railroad track on the second leg, right? So the entry would be on this candle here, and if you actually take the boxes out, you can see you actually get a pullback on that. So the entry actually could be like all the way up here. So the risk itself is really small. It's not a bad risk. You know what I mean? So trade itself, you get the pattern, you have more than 5 candles between the first and second leg. You get a railroad track the second leg. So you can enter in early, you get a pullback. I mean, you literally have all of the uh, all of the ingredients essentially there for a trade. I just know that depending on how this looks, so like think about it like this: if these EMAs were higher, right, were like let's say here and here, then I know that there's no way that this would make sense for you to take the trade, right? Because it wouldn't necessarily give you um, a good risk reward ratio. But the biggest thing for me was the fact that it was like literally at the end, or at the edge, I should say. But if you get the good entry, then your risk is like stupid small. I mean, we were talking like, 6 pips. I mean, that's nothing. What are some of the pairs that you guys liked, that you actually like to trade? Are there any pairs that you guys like to trade that seem very good for you, or that you like actually? So CHF JPY, that's a good, interesting one. Now, have you tried trading it like this with this strategy, or no, Bernard? And Samantha, have you tried the 500 on this strategy as well, or no? BTC, interesting. Did you find that it works, Samantha? Does it produce the kind of setups? Nice. Okay. Or you're trading Bitcoin, or are you just like buying it and holding it, buying it and holding it? Gotcha. CHF. Here, this is interesting. CHF JPY. I really haven't looked at that one. All right, let's see here. Da, 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 da. All right. What's the ADR on this? It's been wild lately. All right, so 70 pips is the ADR. So 210, 3 times ADR. Jeez, look at that move. Oh, smokes. You see, so here's a good example right here of a very strong aggressive move, literally straight down. Like, where are your levels? You know what I mean? So you literally have to do this, you know, to find, your levels. And then really, because of this move here, completely destroyed everything. Where this whole thing is one structure of, peak formation high to peak formation low, and it's like 4.5 times ADR, you know. But this is what I'm talking about here. Some stuff like this, where you get literally just one straight move like that, and it's like 200 pips. And if it's a low ADR pair, it literally blows through, the 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 3.5 or 3 times ADR like nothing, you know, like literally nothing. So that's one. So that would be let's see from here. That'd be 2.5. So I mean, here you could start to build this out. 2.5 and yeah, full cycle there. So here, let's just do this one real quick. You just do this section real quick, or we'll do this section just so you could see how this works. So from, let me get in a couple of, so I mean, this is it right here for this. So you had, I can tell you from here to here is 4.5 times ADR on that one. This one here looks to be what, two, no, three actually, so three. So three times ADR from here to here. This is a failed reset because it did not go down anywhere near. Came back up to try to reset, but it didn't because it didn't pass this, so it kept going, right? You end up getting, from here to here, you end up getting 2.5 ADR, went right back up, another 2.5, and then from here down, gave you three times ADR. Does everybody see how I got to where I got? So, what was it? This one was 2.5. This one was 2.5. This one was 3. This one was 4.5 times. And this one was 3. All right. Yeah. So, does that make sense? How I got to where I got to? That's that. Literally never looked at the pair. Like, I've never looked at it. So, once you get it, like, you'll be able to look at any pair and just start literally to break the shit down. Just by knowing the ADR and starting to put the pieces together. But I can tell you this, having being able to do this in front of you in like literally like 5 minutes did not happen over a weekend or over a month or over 6 months. It happened over years. So really the question you gotta ask yourself is this gonna be worth, me putting in the time into it, you know, to actually get to, to get to do this basically. So I mean now you're up 160, so you're still looking for buys until you get to this point here, at least, because you know that from here to here is three times ADR. If you just look at it, look at from the 4 hour time frame. I mean, just look at it, hide everything, right? This would be peak formation, high. This would be one level. So like level one. Do you see that? Everything that I do with the ADR is just on the 1 hour. When I go to the 15-minute chart, is just to basically take the trade, right? To look at what the pattern is. Now, being you being on a 4 hour chart now, and you see, peak formation is here, and you move down to a level one. Now you can see why you'd want this to come back up here, tag this, and then come back down. So theoretically, then you would probably want this. Yeah, this is 3 times. So you'd want this to tag this high here, and then get a reaction to basically go back down. Because it's been working on this level for a month. But you see that to get from peak to the bottom of level 1 here, how long did that take? It took, what, a week almost, right? A week. Oh, this. Yeah, literally, it was a week trending cycle to get down to level 1. As far as patterns go, this could be a trade out of the edge. This could be a type 1 setup. This could be a multi-session type 1 here. This is nothing. This is a type 1 setup going down. This is a type 3 setup going down. This right here would be a type 3 setup. It comes down to the bottom here, goes back up, tags the middle, and then railroad tracks the bottom all the way down. This is a type 3 in London, a reversal in New York type 1. This is a type 3 going up. Let's see, this really doesn't have a second leg to it. This right here would be a type 1 sell. This would be a type 2 sell. This would not be nothing. This would be a type 3 sell. This would actually be a type 4 here. Because it comes back and it pins the top of the Asian range here. This would be a type 3 sell during London, multi-session type 1W going back up during the US session. This would be a type 2 sell. This is absolutely nothing. That's nothing. This is nothing. This is nothing. I wouldn't trade this either. Actually, is that... Yeah, actually, this is a... It is. This is a trade out of the edge here. First leg here, second leg here, before 430, and there's your trade there. Second leg has a star pattern and a pullback here. This is only an 8 pip risk on this trade. This would be a type 4 pattern here also. comes straight out of Asia and then has to go all the way back to the bottom of the range here, railroad track, straight down. This right here, as beautiful as it is not a trade setup. That sucks. This right here is a type 4 pattern here. It pulls back to the bottom, railroad tracks, sell. This right here would not be a trade. This would, as this is a type 2 reversal in the New York session. This would be a type 1 buy. This would be a trade out of the edge. First leg here, second leg railroad track here to come down as a sell. So, I mean, this produces some really good trades. So you might have something here, Bernard, if you like trading this. Yeah, so there's a lot of trade setups. So listen, if you want to get good, the first thing before you start trading at all is, I'm telling you, you need to map out these patterns. The type 1s, 2s, 3s, 4 patterns. You need to map them out. So that way you know what really is a good pattern versus a bad pattern. I think tomorrow we should have time left at the end. So if you guys want to do some examples tonight or something, and then email them to me and we can all go through them tomorrow, and I could tell you, yes, good pattern, bad pattern, not a good pattern, not a good, you know what I mean? So that way you guys can get what's good, what's bad. Okay? But it's just repetitious. This is why, a lot of people like the mentoring, because every week there's homework, and before you go to the next week, we go over everything, and it's just in really good, a lot of detail that I can't give in like 2 hours here. So does anybody have any questions about anything that we've covered today? So where do you find the ADR of each pair, Samantha? Is that correct? Is that what you're asking? So the link that I gave in the chat for the website is one place off the bat. So this place here gives you all of the ADR. Also, the indicators themselves. Right here, it'll tell you ADR 67. So those two places you can find the ADR. You're welcome. Anybody else with any other questions? So type in no if you don't have a question. Cool. All right. What are you hoping to gain from what am I hoping you get out of it? I'm hoping you get as much as you can out of it. Clarity, simplicity, what were you hoping to get out of the 2 day? What were you hoping to get out of the 2 day event, Parker? Okay. Was it basic understanding of just anything in specific or just the overall strategy? Gotcha. So, have you watched all the videos on YouTube yet, Parker? Okay, so what I'd probably recommend then is to go to the channel and go to the playlist and watch Trading with Market Makers playlist. It has them literally in freaking order. Yeah. Well, Dan is the one that was in the mentoring. Is that right? Yeah. Yeah. If you're new to the concept, literally that playlist on YouTube will break everything down because I mean some of those videos are like an hour and a half long. I don't know, at least the first couple are. Ward, the mentoring, it's going to be, I'm hoping in August because I'm redoing all the videos um, to that course, and I'm adding in new homework and new tests and all that stuff. So I don't know yet the cost, to be honest with you. It's not going to be more expensive than what it is now. I can tell you that. It's going to be the same or less. Yeah. I know. Yeah, the scary part is always that was the point of this, by the way. So it's affordable, you know, to the the mass majority of people. Yeah. All right. So if you guys don't have any other questions, I'll let you guys go, and then we'll see you again tomorrow. I'm gonna send you a new link tomorrow at 10:30, same as today. If you think of any questions overnight or something, write it down. If you want to do that, the homework and stuff, do it. Take the screenshots, copy and paste the links into an email, and send them to me. If you want to do the same thing with like weekly cycles, identify the 3 weekly cycles. That's fine. I'm more than happy to help you identify this stuff. That's not a problem. All right. So you guys be safe, enjoy, and we'll see you tomorrow. The email again is fxnmentoring@gmail.com. Can we send you charts after these? Yes, you can send me charts after. Yes. As long as you make the effort, I'll help you. But I can't do it for you. You know what I mean? But as long as you put in the work, yeah, of course. I'll give you feedback on it. All right. All right, guys. Have a good night, and we'll see you tomorrow.